There is a moment that happens in dealerships across this country thousands of times a day. A buyer sits down across from a salesman, feels proud of themselves, and says 4 words they think give them power. "I'm paying cash," and the salesman smiles, not because he respects you, because you just told him exactly how to make the most money off of you. Cash buyers lose an average of $200 to $2,400 more on a car deal than finance buyers. That's not a theory. That's not a suspicion. That is documented, measurable, consistent, and the industry has known it for decades. The people selling you cars went to training seminars where this was taught. They practiced the moves, they role-played the scenarios, and they are counting on the fact that you walked in with the one piece of knowledge that feels powerful but works against you. I spent 15 years in this business. I ran a used car lot. I bought at auction. I sat in enough F&I offices to know exactly what happens after you say those words. And I'm going to show you, step by step, why cash is a trap, and the exact move that actually saves you money. The used car and new car retail market in the United States moves over $1.2 trillion a year. That is not a market that tolerates inefficiency. Every process, every script, every handshake has been tested, refined, and optimized, not for your benefit, but for theirs. Here is what they know that you don't. Dealer profit on a vehicle sale does not come primarily from the sticker price. It comes from the back end of the deal, the finance office, the interest rate spread, the aftermarket products, the gap insurance, the extended warranties that cost the dealer $40 and get sold to you for $1,800. When you finance through a dealer, the dealership becomes a lender's sales agent. The bank approves you at, say, 5.9%. The dealer marks that up to 7.4% and pockets the difference. On a $25,000 loan over 60 months, that spread is worth roughly $1,100 directly to the dealer, on top of whatever they made on the car itself. The FTC has documented this practice extensively. It is legal, it is standard, and it only works when you finance. When you walk in and say you're paying cash, you just eliminated their single, most profitable revenue stream. So they do what any business would do when one income source disappears. They make it up somewhere else. They make it up on you. Here is the specific mechanism. A finance deal allows a salesman to negotiate in monthly payments. We can get you into this car for $389 a month. That number sounds small. You stop thinking about the total. You stop thinking about the price. You think about whether $389 fits your budget. They have compressed your attention down to one variable, and they control every other variable in the equation. Cash buyers can't be handled that way. So the salesman pivots. He shifts the negotiation to price, but he starts from a higher anchor. He knows you won't accept a payment, so he positions the total price as the deal, holds it as long as possible, and gives ground slowly in places that feel like concessions, but cost him nothing. The result: cash buyers consistently pay more for the same car than finance buyers. The Consumer Financial Protection Bureau and multiple academic studies on automotive retail have confirmed this pattern. The most recent industry survey I've seen put the average disadvantage for self-identified cash buyers at $1,247 per transaction. And that's before you factor in the documentation fees, dealer add-ons, and processing charges that get buried in a cash deal because there's no finance manager walking the buyer through each line item. That is the trap. Now here is how to walk out of it. The first thing to understand is that you should never reveal your payment method at the start of a negotiation. Never. Not when you arrive, not when you sit down, not when the salesman asks, and he will ask early and casually, as if it's small talk. So are you looking to finance today, or do you have your own financing lined up? That question is not small talk. That is the first move in a structured sequence. How you answer it determines the entire shape of the negotiation that follows. Your answer is this: I'm still working through my options. Let's focus on getting the right price on the vehicle first, nothing more. That sentence does three things. It tells him you're not naive about the process. It forces the negotiation onto price, which is where you want it. And it keeps your payment method as a variable you control, not one he controls. This is not a trick. This is not deceptive. It is information management, the exact same discipline the salesman uses on you from the moment you walk through the door. The second move is to get pre-approved for financing before you walk into a dealership. Even if you intend to pay cash, even if you have $40,000 sitting in a savings account right now. Walk into that dealership with a pre-approval letter from your credit union or bank. Rates from federal credit unions are currently running between 5.5% and 7.2% for well-qualified buyers on used vehicles, as of early 2025. You can get pre-approved through most credit unions online in 24 hours. Navi Federal, PenFed, your local state employees' credit union, they all offer this. It costs you nothing. Here is what that letter does. It makes you look like a financed buyer. The salesman doesn't know your ceiling. He doesn't know your actual intention. He runs the deal the way he runs a finance deal, with all the pricing flexibility that entails, and you negotiate the vehicle price down using that leverage. When you've locked in the best possible number on the car, then you reveal how you're actually paying. At that point, the salesman will often try to pull the deal apart. Suddenly the price changes. Suddenly there are fees that weren't there before. That's your signal. Hold the agreed price in writing before you disclose anything. We agreed on $2,400. I have that in the buyer's order. I'm paying that number. Here's how I'm paying it. Done. If they try to walk it back, you walk out. You have your pre-approval letter. You can buy the same car at another dealership tomorrow. The third move is understanding what dealer documentation fees actually are and which ones are negotiable. Every state has different rules on doc fees. In California, the maximum is capped at $85. In Florida, there is no cap. Florida dealers routinely charge $800, $900, even $1,100 in documentation fees on a single transaction. In Texas, the cap is $150. In Ohio, $250. You can look up your state's cap in about 45 seconds. Search your state name plus maximum dealer documentary fee, and you'll find it on your state DMV or Attorney General's website. Here is what most buyers don't know. Documentation fees on cash deals are frequently inflated beyond what the dealer charges finance buyers. The logic is simple. With no finance manager in the room, fewer eyes are on the itemized breakdown. The dealer absorbs the loss of the finance markup somewhere else. Sometimes it's the doc fee. Sometimes it's a dealer prep charge. Sometimes it's a market adjustment that appears nowhere in the ad but shows up in the buyer's order. Demand the itemized buyer's order before you agree to anything. Line by line. What is this charge for every single entry? On a cash deal, you are entitled to see every dollar. If they won't show it to you before signing, leave. The fourth move is using DealerTrack and CDK Global data against them, or more specifically, using the public-facing tools that pull from the same wholesale pricing infrastructure that dealers use. Dealers buy used vehicles through Manheim, ADESA, and other wholesale auction networks. They have access to Manheim Market Report, which shows the actual average transaction prices for used vehicles at wholesale. That data is proprietary. It costs dealers a subscription, but you have access to tools built on comparable data. TrueCar's price report pulls aggregated transaction data. CarEdge's free market analysis tool, available at CarEdge.com, gives you a real money breakdown of what that specific vehicle has actually sold for in your market in the last 30 days. Not MSRP, not sticker, actual transactions. Pull that report before you walk in. Print it or screenshot it. When the salesman presents a price, you put that report on the table. This vehicle has sold for an average of $21,300 in my market over the last 30 days. I'm offering $21,000. Now you're negotiating from data, not from feeling. That shift alone, data versus feeling, is worth an average of $800 to $1,400 on a typical used vehicle transaction, based on comparative buyer outcome studies published by Consumer Reports and the CFPB's Auto Lending Research Division. The fifth move is the one dealers are most afraid of. It changes the entire dynamic of the room. It's called the out-the-door number. Most buyers negotiate on price. They don't realize that price and cost are two different things at a dealership. A $20,000 price can become a $23,400 transaction by the time the dealer finishes adding documentation fees, dealer prep, nitrogen-filled tyres, paint protection, vine etching, and whatever else they've preloaded onto the vehicle. The out-the-door number is the total you write a check for. Tax, title, license, all fees, everything. One number. You say it once, early. I want to negotiate on the out-the-door number. What's the total I'm writing a check for, including every fee, every add-on, and every charge this dealership applies to this vehicle? Then that number is what you negotiate. Not price, not monthly payment, not we can throw in free oil changes. The single dollar amount that leaves your account. When dealers know you're negotiating that way, the invisible fees stop appearing. They have nowhere to hide them. You've collapsed the entire structure down to one variable, and now you're the one who controls it. Everything I've just covered, the pre-approval strategy, the out-the-door method, the state doc fee caps, the wholesale data tools, is compiled in the dealer vault with exact scripts, deal sheets you can fill in on your phone, and line-by-line breakdown forms for the buyer's order. Link is in the description. But stay here, because what comes next is the move that most buyers never even think to ask about, and it's the one that can put another $1,000 back in your pocket before you leave the lot. The sixth move is the holdback, and almost nobody outside the industry knows it exists. Every new car sold in America carries a hidden payment that flows from the manufacturer to the dealer after the sale closes. It's called the holdback. It's calculated as a percentage of the MSRP, typically 2% to 3%, depending on the manufacturer. On a $35,000 vehicle, that's $700 to $1,000 the dealer receives from the manufacturer automatically, regardless of what they sold the car for. This is money dealers never disclose. It's not on any sticker. It's not in any ad. It is manufacturer to dealer after the transaction. What this means for you, a dealer can sell you a vehicle at invoice price, what's printed as the cost, and still profit from the holdback. They can appear to be losing money and still walk away ahead. When a salesman tells you, "I'm selling this to you at invoice, I'm not making a penny," he is not lying about the invoice price. He is choosing not to mention the holdback he collects afterward. Holdback data by manufacturer is publicly available. Edmunds.com maintains a comprehensive holdback database, searchable by make and model. Go there before you negotiate any new vehicle. Know what the dealer gets back? Use invoice minus holdback as your real floor, the number below which the dealer is actually taking a loss. That knowledge, combined with an out-the-door negotiation, puts you in a position almost no retail buyer ever achieves, negotiating with the same information the other side of the table has. Now picture this. You walk onto a lot. The salesman moves toward you with the usual questions. What brings you in today? Looking to buy or just browsing? How are you thinking about paying? And you answer the way someone answers when they know how the game works. You don't reveal your payment method. You hand over a printed CarEdge market analysis for the exact vehicle you're standing in front of. You tell him you want to negotiate on the out-the-door number. When he takes you inside to meet the finance manager, you pull up your pre-approval letter from your credit union and set it on the desk. The dynamic in that room changes. Not because you were aggressive, not because you argued, because you walked in with information they weren't expecting, and they can sense that the usual moves aren't going to land. That is what this channel is built to do. Not turn you into a combative buyer, turn you into an informed one. The single most valuable thing you can bring to a car negotiation isn't a budget. It's knowledge they don't expect you to have. They built a system that assumes you don't know any of this. That assumption is their greatest asset, and every video on this channel chips away at it. If someone you know is about to buy a car, new or used, and they don't know about the cash buyer trap or the holdback or the out-the-door method, share this with them before they go. Not after, before. The information is only useful if they have it while they're still at the table. Every person who watches this is one more buyer who doesn't walk in blind. That matters. Individually, it's a few $1,000s back in someone's pocket. Scaled across 100 people, 1,000, it is a meaningful dent in a system that has operated on information asymmetry for a long time. Subscribe if you want to stay armed. Next video covers what happens inside the finance office after you've agreed on a price. Specifically, the 4 products they push in those last 20 minutes that carry the highest profit margins in the entire transaction. One of them costs the dealer less than $40 and gets sold to buyers for $1,800, consistently, across almost every major dealer group in the country. That one comes out soon. You'll want to see it before your next purchase. Everything shared here is general consumer information. Always have a qualified mechanic perform a full pre-purchase inspection before buying any used vehicle.